A strategy Bitcoin purchase, corporate adoption shock, and narrative segmentation. Hi everyone, and welcome back to my weekly event study research and insights. In this week's scientific event study, we examine one of the most closely watched corporate actions in the Bitcoin ecosystem, a strategy's renewed Bitcoin accumulation. Corporate Bitcoin purchases are often discussed as capital allocation decisions. However, from a market information perspective, they may represent something far more important. They act as a signals about confidence, and signals about long-term commitment, and signals about how corporations view Bitcoin's future role in the global financial system. The central question of this study is, therefore, not how much Bitcoin was purchased. The central question is how different market participants interpreted the purchase. Did investors view it as a powerful adoption signal, or did they see it as routine treasury management with limited informational value? To this question answering, we employ an event study framework and analyze the information transmission process surrounding the event. And the finding reveals substantial evidence of narrative fragmentations and information split segmentation across the Bitcoin market. So let's begin it together. So strategy Bitcoin purchase. Strategy's renewed Bitcoin accumulation represents a classic example of what we describe as corporate adoption shock. Unlike ETF flows, which primarily reflect institutional capital movements, corporate purchases carry a strong narrative component. The purchase itself is observable, however, its meaning remains open to interpretation. This makes the event particularly useful for studying how narrative-driving information diffuses through heterogeneous market participants or objectives is therefore to investigate not only market reactions but also differences in interpretation. So let's look with together what happened exactly. During the observation period, a strategy resumed Bitcoin accumulation after periods of uncertainty. Several developments occur simultaneously. Corporate treasury exposure increased, corporate confidence appeared to strengthen, and market participants interpreted the purchase as an important signal, and the broader Bitcoin adoption narrative gained momentum. The key takeaway is that the event was not merely a transfer of capital. Rather, it acted as an informational signal that influenced market expectations regarding long-term adoption and institutional conviction. So what is or event study results? The event study analysis revealed a positive market response. As we can see, the abnormal returns on the event date were positive. Cumulative abnormal returns remained positive during the post-event window, and also volatility remained moderate rather than extreme. However, one result stands out, and the information delay measure was relatively high. This suggests that market participants don't immediately converge on a common interpretations of the event, and the D-ISS score reached 88 out of 100, indicating a substantial degree of information speed segmentation. In other words, the market reacted positively but not simultaneously. Narrative fragmentation. This is where the event becomes particularly interesting. Market participants did not interpret the purchase in the same way. One group viewed the announcement as a strong bullish signal, and for these investors, the purchase represented confidence, scarcity reinforcements, and long-term commitment to Bitcoin adoption. Another group viewed the event differently. they interpreted it as routine treasury management. From this perspective, the purchase contained little new information and therefore carried limited implications for future market structure. The coexistence of this competing narrative generated significant segmentation across participants. What is the market implications? The findings suggest that corporate Bitcoin purchases should not be viewed solely as liquidity events. Instead, they function as narrative shocks, and the transmission mechanisms appears to follow a sequence. A corporate action occurs, a narrative is formed, participants interpret the narratives, and market reactions emerge from those interpretations. This implies that interpretation itself may be just as important as the capital involved. Understanding market narratives may therefore be essential for understanding future Bitcoin price dynamic. What is this research conclusion finally? Based on the evidence, this event is classified as a corporate adoption shock. And the key finding is that narrative-driven events generated stronger information speed segmentation than many traditional macroeconomic releases. This result suggests that Bitcoin remains highly sensitive to differences in interpretation, particularly when events involve corporate adoption, conviction signals, and long-term strategic positioning. Importantly, this analysis is not based on the subject market commentary. In fact, this analysis is inspired by scientific event study methodology developed in or published research, the US dollar volatility's spillover and competitive effects on Bitcoin return dynamics, and mining behavior published in Applied Economics Journal. Just as that research investigates how macro-financial information propagates through the Bitcoin ecosystem, this framework examines how corporate adoption signals travel through markets, influence expectations, and generate measurable differences in participants' behavior. The evidence suggests that Bitcoin markets narratives don't simply accompany price movements, and they actively shape how information is incorporated into prices. Thank you for watching this week's Beta G Dynamics scientific event studies. See you in the next videos.